Beginning the broadcast, in the USDA's first condition ratings of the season, 76% of the nation's corn is listed as good to excellent. Nebraska and Wisconsin are the leaders in the excellent category with a quarter of the crop under that distinction. In soybeans, 84% of the crop is planted with 62% emerged. I spoke with Jeff Peterson of Heartland Farm Partners on Wednesday to get a better look at the numbers.
Couple things I think that's this time of year it's interesting to get the crop planted, get it emerged, and we start evaluating that condition. And this week we did get a condition score, as you mentioned, on the corn side. And starting off in Nebraska, 88% good to excellent. And we always put the good and excellent together. That's actually the second best rating we've had for this week, going all the way back to 1987. And when we take a look at the national number, we bring the good to excellent together, 76% good to excellent. That particular rating would rank the fifth highest, going all the way back to 1986. So at least as far as the observers see this crop, we're off to a really good start.
Okay, also talking about the markets, been hearing this term limit up, limit down a lot in our market discussions. Explain to our audience kind of what that means.
Yeah, so the limit trade, we have experienced that a few times, and it's type of volatility that we're having in these markets. So what happens, the Chicago Board of Trade or the Chicago Mercantile Exchange, twice a year they establish the price limit. So on first trading day in May, they can come out with a new limit. First trading date in November, and this relates back to corn and soybeans. So currently on corn, you can trade 40 cents a bushel from the prior day trade, higher or lower, and then at that point they won't let the price move any further. Trade still happens. Buyers and sellers still can trade if they're willing to trade at that price. Now on the soybean side, it's actually at $1 is what our limit is. But actually the thing we have to think about here is that we actually can have expanded limits. So what happens is that if we go up in all, let's say 2 future months are trading up limit and close up limit, then the next day we actually trade expanded limits. And on corn, that would be a 60-cent limit, and on soybeans, that would be a $1.50 limit. And the whole reason for these is the CME looks at it is to give us this orderly trade. They don't want this market to trade too far, too fast, one direction or the other.
Can't be too volatile. And one thing adding to this volatility, the weather, would you say?
We're kind of in a double weather market right now, and let me explain that. We've got the weather challenges that are going on in South America going on. Along with the same time, we've got some weather concerns here in the U.S. Starts off with our drier than normal type subsoil and topsoil conditions that we have in parts of some of the major grain producing areas, Corn Belt in here in the U.S. But then we've also got some hotter, drier conditions in the forecast, and that's all coming together to definitely give us and lend to the volatility.
Yeah, you were talking about South America. Give us an idea of how their safrinha crop is looking right now and how that, I guess, volatility in South America is adding to any impacts for U.S. producers.
Yeah, it's a big deal. And as you take a look at that safrinha corn crop, for Brazil, it's had a tough road. It got planted late because the soybean crop got planted late. So we got to go clear back to last fall when that soybean crop got planted. And then this crop got put in late. And what's a big deal about that is that we're pushing that final fill, when we're going through the pollination stage and filling out the kernels is getting put into a very dry time of the year normally in South America, but then it's been exceptionally dry on top of that. And if you think about it, earlier in the year when USDA first came out with Brazilian numbers, they were talking for all their corn crops about 110 million metric tons. Well, now USDA has them down at 102 million metric tons, which put that in perspective, that's about 4 billion bushels, okay? Now the U.S. this last year, we raised 14.1 billion, so we have a comparison, but it does look like that crop is going to get smaller yet. A lot of the private analysis coming out of South America would say 90 million metric tons, which that's 12 million metric tons lower, or that's about 472 million bushels lower. So as we make that crop smaller, the other important part to all this is the fact that Brazil this year looks like they'd still probably be number 2 on the export side. So whatever they don't end up producing and they don't use internally, then all of a sudden, there's a lot of competition out there that want their corn. If they can't get it from them, then they got to really kind of come to the U.S. or they have to come to Ukraine. So that's where it comes in for the U.S. producers on the export demand side.
And let's stick internationally, and let me get an idea of China's role in the big picture of everything right now.
Yeah, China, it's really interesting. It's hard to believe. They're actually the number 2 producer of corn in the world, but boy, are their imports really thrown this market a curve. And to put this in perspective, traditionally, they're not a big importer of corn. If we'd go back a couple crop years, they were importing about 7.6 million metric tons of corn. This year, and also forecasted for the 2021 crop year, they've got that raised up to 26 million metric tons. So that's probably over about 750 million bushel increase higher than where they had been at their highest point previously. So what that's doing is that's taking a lot of extra corn from other individuals who wanted to import it. And in addition to that, at a year when we've got tighter supply coming out of Brazil, that makes the tightness on the world stocks even tighter. And what everybody's looking at is they're still wondering, where will it stop? Do they need all this corn, or are they physically putting it in reserves? And because of some changes they've made on their hog herd, I'd say, you know what, a lot of this corn is needed. And the reason that we can say that is as we dig into their numbers, what's surprising when we look across corn, we look across wheat, we look across oats, barley, grain sorghum, this year they're forecasted to use about 260 million metric tons of those grains. That compares to about 218 million metric tons last year. So we're seeing a big jump in their feed demand. So I think a lot of this is real demand for them.
And then looking a few weeks down the road, quarterly grain stocks and acreage reports at the end of the month. You always give us such a good breakdown on this data, kind of a sneak peek on what we might see?
Yeah, so what we're looking for, and that is going to be a big one. It's all eyes are going to be on what's going on the acres, and we're expecting to see more acres. We actually, compared to where the March planting intentions report was at, we'd expect to see probably 4 or 5 million more acres between corn and beans. It's going to be a toss-up between whether it goes corn or beans. We think corn is going to pick up at least 2, maybe 3 million more acres, and the rest of that will go into the soybean side. On the stocks, I think we're going to continue to see the stocks tightening up, probably a little more than we'd expect to see. And so I think that's going to be setting this up to see, exactly how's the rest of the summer going to trade once we get those numbers behind us.
Okay, great info today as always. Let's end it with any marketing or risk management advice that we haven't talked about.
I think the biggest thing right now that we hear from a lot of people is that in some areas, they're concerned about making sales because of the fear of not producing that crop. Don't forget you've got your crop insurance there to help you out with that. But the other one is the fear of making sales because they're afraid of missing out on higher prices. So don't be afraid to physically use some of the different contracts that are out there to be able to get a floor in place. These are great prices, and we're going to need to take advantage of them here over the next few weeks.